Brown, Sales Director at Mortgages for Business. A very warm welcome to our weekly buy-to-let mortgage market update. I hope you guys are doing really well. The sun is shining, it's a beautiful day here in Sevenoaks, and I've got loads of really positive changes to report to you this week in terms of lender appetite. I've just noticed behind me on the mantelpiece there's a dog toy, a stuffed chicken, sorry about that. So what's been happening? So we've seen a swathe of changes from lenders who operate in the really specialist end of the market, increasing appetite on loan to values on larger loans and also dropping pricing. Now, when we're talking about specialist lending, we're really referring to those lenders who don't mind lending to landlords with really large portfolios. I mean, they'll lend to landlords with small portfolios as well, but particularly good at lending to landlords with property portfolio in excess of 10 properties, where you will find that in the more high street, the more vanilla end of the market, appetite seems to dissipate. So these lenders are great for landlords with larger portfolios, people looking to borrow through limited companies, which is obviously incredibly popular, and also on non-standard properties, so for example HMOs and multi-units. So what we've seen this week is, first of all, Keystone Property Finance bring out a series of limited edition products for loans with up to 65% loan to value, and also with a loan amount of between £350,000 and £1 million, and the rates are really competitive. Now, Keystone Property Finance are particularly good for all the reasons that I've previously just outlined, but also they lend to trading limited companies, which is fairly unique in the marketplace at this moment in time. So as well as Keystone bringing out a series of limited edition products, we've also seen Fleet Mortgages reduce their rates, with prices now starting at 3.19%. Now, they've also increased their maximum loan to value, so you can now have a loan of up to £1 million at 75% with Fleet, and loans of up to £1.5 million at 70% loan to value with Fleet. So great news there. We've seen TML, or the mortgage lender, reduce their completion fees on larger loans, so loans of between £500,000 and £1 million. And their completion fees now start at 0.5%. So for home loans, have increased their maximum loan to value to 75% on loans of £1 million and 70% of loans up to £1.5 million. And we've also seen Landbay release some limited edition products with pricing now starting at 3.09%. Now, all of these lenders fall into the specialist end of the market. So again, just reiterating, the landlords with larger portfolios, HMOs, limited companies, multi-units. So really great news to see that end of the market opening up. We definitely saw a contracting in terms of options for landlords who needed a specialist lender during lockdown. And that's not to say these lenders weren't lending, but they were definitely curbing appetite. I don't think that's actually because of the lenders themselves, but more in terms of the desire to lend from the people that fund these guys. So really positive news to see them opening back up there. Okay, a bit of update on the housing market for you now. I think it's fair to say, based on what we're seeing, that things are pretty busy at the moment. I know that lots of my clients are definitely in the market to acquire property, obviously looking to make use of the stamp duty holiday. And actually, when we're speaking to people, what they're saying is it's actually incredibly hard to secure property at the moment because there's a huge amount of competition from other buyers. And so to underpin this, some data for you now. So the number of housing sales agreed per estate agent branch has soared in June, according to the latest figures from NAEA Property Mark. Now, it says the data shows that the average number of sales agreed per estate agency branch stood at 10 in June, double the amount recorded in May. Now, the number of sales has also increased year on year, rising from 9, which was recorded in June 2019. Housing demand was 10% higher in June compared to May, and is up by nearly a quarter, 24%, year on year, rising from 305 house hunters registered per estate agent branch in June 2019 to 379 registered in June 2020. Additionally, they say that in June, 1 in 10 properties sold for more than the original asking price, the highest recorded since February 2016, when it was 11% sold for more. They also go on to say that nearly 2 in 5, indeed 57% of properties, sold for less than the original asking price in June. And supply increased to 37 properties per member branch, increasing from 35 in May and remaining steady year on year. So I think really just looking at that information and trying to take something meaningful from it, what it shows is that there is definitely a continued increase in terms of people looking to acquire properties at the moment. But what we're also seeing is an increase of the supply of stock on the market. I know that's what a lot of my clients have been saying, that when they're looking for properties, there actually isn't that much to choose from, and they're not seeing a huge amount of new stock coming to market, but actually it looks like things may be starting to increase on that side of the selling process too. Another piece of property market news for you now. So apparently the government is reportedly drawing up plans to extend the Help to Buy scheme due to COVID-19 delays. According to the Financial Times, ministers have been asked to extend the scheme beyond its planned December deadline to support buyers whose purchases have been delayed by the pandemic. So the scheme is due to end in April 2021, and a new version of the scheme would run from then until March 2023 for first-time buyers. Now, if the original scheme ends when planned, sales transactions would need to be agreed by December 2020. Now, the Help to Buy scheme has been used for more than 250,000 housing transactions in the UK, supporting thousands of first-time buyers onto the property ladder. However, the Help to Buy scheme was only ever launched as a temporary solution. Developers are facing a deadline at the end of this year to complete properties eligible for the current scheme before a new version of Help to Buy, limited to first-time buyers, is launched in April 2021. Now, the extension of the Help to Buy scheme would be incredibly welcome, because as we all know, we do need first-time buyers to be moving into the property market to help keep things moving along and play a hugely important part within the sort of property cycle, as it were. And what we're finding at the moment is that first-time buyers are really struggling, particularly because of the higher deposits lenders are currently requiring to get themselves onto the property ladder. So an extension to the Help to Buy scheme would be incredibly welcome. Some news on interest rates for you. A new report from PwC has outlined how banks and lenders should prepare for the possible introduction of negative interest rates. In the report, PwC says that noises from the Bank of England suggest that chances of it dropping its base rate to below zero have gone from don't count on it to anything's possible. And for banks, that's a really big deal. Now, PwC says a very real prospect of negative interest rates. Following the most recent policy announcement, the government told the media that the Bank of England's Monetary Policy Committee was assessing the case for negative interest rates in this country. Indeed, minutes of an 18th June meeting show some committee members want the bank ready to cross that bridge in the event of a second wave of COVID. So, you know, really this sounds like people are preparing for what might happen in the future. So not necessarily a drop to negative interest rates now, but if we were to see a second wave of COVID come the autumn, they're not ruling out the possibility of interest rates going negative. Lastly today, I just wanted to talk to you briefly about the very exciting offering which Lendingvest have brought to the market by way of their appetite statement. Now, the appetite statement is essentially a pre-agreed credit line which Lendingvest will make available to borrowers for potential of future purchases and remortgages. Now, the real benefit of the appetite statement is that essentially Lendingvest will produce a document setting out that they are prepared to lend, you know, Jenny Brown, X amount of money at X loan to value, investing in certain types of property classes for a period of, say, 6 months. And the kind of variables here are the amount loan to value and also the duration for which the appetite statement will be valid. But what this then gives me is the ability to progress mortgage applications with Lendingvest during this time without further underwriting. The mortgage offer would be only subject to valuation. So what this means is that I can go and make an offer on a property. I already have my credit, my appetite statement to hand, ready to show the estate agents. And on agreement of the purchase price, I'm able to move straight to offer with Lendingvest with no further underwriting, which means I can move with real certainty and also at speed. Now, people can only apply for the credit statement once they've got a mortgage application underway with Lendingvest. So you would apply for a mortgage now and then ask for the the appetite statement to be prepared for you. And to do this, Lendingvest will assess your finances, your net position, income and expenditure, and also want to have an interview with you to understand your kind of business model and plans for the future. But at the end of this, what you do get is this statement, which is an incredibly powerful thing to have. Now, once you have this statement in your hand, you're by no means committed to actually doing further transactions with Lendingvest, and it costs you nothing to do it. So it's a really good offering. and actually unique on the marketplace at the moment, which we're really excited to be able to share with you. So if you do have any questions on this statement and how you may be able to go about getting one and how it looks, and also in terms of the Lendingvest offering, it's worth adding here that they can lend to individuals and limited companies on standard properties, HMOs and multi-units. Their rates are very good in the specialist end of the market particularly, and they're very, very landlord friendly. So again, another lender who doesn't mind landlords with really large portfolios in the background. They have a very good rental calculation for the background portfolio, and also a good rental calculation for the property on which they're lending as well. So a really unique offering at the moment, which we're really excited to share with you. And yeah, if you do want to have a discussion with us around that, we'd be very happy to do so. So there you go, a busy and positive week in the buy-to-let market over the last 7 days. As always, if you do have any questions and want to chat things through, our consultants are very happy to take your call. We've got people back in the office as well now, which is fantastic. The number 0345 345 6788, and there's lots of information on the website www.mortgagesforbusiness.co.uk. So until next week, look after yourselves, enjoy this gorgeous weather. I hear the weekend is going to be beautiful, so make the most of it. But autumn will be here before we know it now. But I'll see you next week, and thanks so much for joining us.